Hello everybody, welcome back to another video. Thank you so much for watching. Today is Sunday, October 6th, and I am going to be reviewing, some comments from YouTube, some constructive comments. So, let's look at the first comment. Also, gamble should not even be in your vocabulary. Be serious. I agree. I'm trying to be raw and open and honest. I have bad behaviors like gambling. I don't want to gamble, but I'm being raw and honest about it. A lot of traders do struggle with this. Traders crave excitement, um, and they will enact like need fulfillment out in trading when they shouldn't. Trading should be focused on following a process. It shouldn't be exciting. It should be a job. So I do agree with this guy. I do appreciate comments. Um, I want people like it may look like kind of a not constructive comment, and maybe he could have had a better delivery. But I do appreciate it because he's right. I do, and I have fun with my videos. I like to enjoy myself. This is fun. It's supposed to be a little bit entertaining for the audience. But yeah, I do need to be very when I'm trading, I do want to be very locked in and serious, and not make stupid gambling mistakes. I have to follow a plan and a process. And at the end of this video, I'm gonna cover some really important points about how I think I'll be able to do that. All right, next one. Just pick a time frame you like and master it. You are creating your own problems looking at too much. I just disagree with this one a little bit. If that works for you, great. I know enough professional traders, people that trade for a living, that do look at multiple time frames. Lance B, Adam Grimes, not public known people who I interact with. I think for day trading, the hourly is most important, but when I only want to trade it at key levels, okay? Prior day high, prior day low, if it's outside those levels. Um, this is a new thing for my plan, but it's very important. Um, and so I just disagreed a little bit. I want to trade the hourly time frame, but I want to use the 5-minute chart and the 15-minute chart to know when I should enter, to see when the momentum change is happening, or to see when the momentum in my favor is about to pick up. So I do really appreciate this comment because I think for some people this is true, but for me, the way I trade, I just want to focus on the higher time frames. So thank you, and let's go to the next one. I challenge you to set a daily loss limit for yourself and stick to it. Must do. Trading is a business. You can't lose $800 a day trading micros, or you'll be out of business. You can turn this around. I have faith in you. Thank you very much. I'm grateful for the support, and I completely agree. I've set since my very bad wipeout days last week, 2 weeks ago. Yeah, 2 weeks ago, I have set a max loss of 3R. So my max loss should only be around $300 to $400 a day, but ideally not surpassing 300. With the micros, I am thinking about sizing up to a $2,500 account and trading one ES contract, but I think before I do that, I want to prove some consistency following my current plan first. So, I don't know. Maybe I'll do 1,500 account and do 5 micros. We'll see. But thank you for your comment, and let's go to the next one. Loss is part of the game, especially in the beginning, but it should be at least controlled. Totally agree. Same deal as the last comment. I think I'm going to. The quote at the start was from one of my good trading friends and mentors, and the second quote about I'd rather lose following my plan than lose doing dumb shit. And yeah, like I'm gonna make trades. Loss is part of the game, but ideally should only come from um, it should only come from like following a plan. It shouldn't be from guessing and gambling. So yeah, again, I'm gonna talk about what I'm gonna do at the end of the video to really bring down the dumb trades and hopefully increase the winners. So let's go to the next one. I feel your pain, mate. I've been caught on the wrong side of the fence like that so many times, it's not even funny. If a pullback keeps going further than you think it's reasonable, you may have to think that perhaps it's not a pullback, but a trend in the opposite direction. Yeah, this is a based comment. I This is why I think this was before I started adding confirmation, or I think this was right when I added confirmation, but I wasn't considering the full picture. I was just trying to trade with confirmation in the way I think it was going. So what happened is the market was way gapped up. Like it was clearly a time that the market was going to mean revert and come down, but I was just like I thought it was going to go long. I thought it was going to moon. No, no, no. You gotta take what the market's giving you and consider the full bigger picture. And that's why I'm going to mainly start trading at key levels. And if we've gapped really far, I'm going to trade for the mean reversion. Or just not trade too. We'll see. But yeah. Next comment and last comment before I get into what I'm going to do that I think is really going to turn me around. I think I've already. Well, I'll just go to the next comment. My advice, learn to wait for a better defined setup. A lot of your entries are too anticipatory and cause you to get chopped up. There was really only one good trade you could have taken today, that being on a 15-minute dip buy after the doji, right side of the V kind of setup. Yeah, exactly. I mean, this is like right the day. This is the day I think that caused me to add the confirmation entry. Because it was a day we had a big like 200 point decline and then a 300 point rally up, and the whole 200 point decline, I thought, oh, we want to be going up. This is just a pullback, but it pulled back quite a bit further than I wanted it to, than I thought possible, and if I just had the confirmation entry above the previous bar, I never would have got filled. I never would have got a lot of, you know, taken out, and I would have had a really awesome gain. And I might have even gone short and gone the right way. So, yep, these are the comments. I really appreciate everyone's comments. And now I want to talk about my plan, what's changed, and I'm really excited to share this with everyone because I think it may make a big difference in your trading. I think it's going to make a big difference in mine. So, without further ado, I'm going to show this now. Alright, this is the part of the video I'm most excited to record. So, this is the big change I've made. This is what I've added to my plan. I'm going to start at the top, but you guys just pause this right now, read it, and then come back, and I'm going to start talking about it. Okay, so importance of key levels. This is what I'm really going to change my trading to structure it around. Okay, so the key levels. This is where everything happens, right? It's where the big people that really move the market step in. Okay, the prior day high, the prior day close, and the prior day low. So, and outside these levels, by the way, this is where cleaner price action, cleaner movements happen. Okay, it happens after bars, like littler bars. It's the market is constantly contracting and expanding, right? From each contraction comes a new expansion, and from each expansion comes a new contraction. So yeah, you don't want to trade right after an expansion. You got to let it contract a bit and consolidate and figure out what it's going to do next. What are the big guys going to do next? Okay? So we only want to look for the big game. and not the panfish. This is something a newer trader friend of mine, experienced guy, successful, been doing this for over half a decade at least. This is something he said to me, and I was scalping in no man's land. I want to be taking 2 to 4 trades a day, maybe less sometimes. I just want to focus on those golden quality setups that happen at those key levels. And how do I know what to do at those key levels? Well, first and foremost, you got to be patient. You got to be very patient at those key levels when deciding what to do. You can't rush and jump in, okay? It's got to be controlled, it's got to be slow. We can't just jump in like guessing random because we crave excitement, which is what I've been doing. Um, I just didn't have as good of an edge. I really think most people's discipline and psych problems, if they just have a good edge, won't exist. Um, and I think, like, truth be told, there's many times where I thought I had a good enough edge where I didn't. I may not even have a good enough one after this, but I do think I'm pretty damn close. I've been doing this for over 2.5 years. January will be 3 years. So I'm 2 months away of just strictly only E-minis, having done it for 3 years. And Adam Grimes says it takes most retail traders 3 to 5 years. So after 3 years of being complete, I'll enter my senior year of this, 4th year, and hopefully that'll be the year it happens, but hopefully we can really put some stuff together at the end of this 3rd year. Okay, let me just read this real quick. Yeah, I really just want to focus. I made a quick checklist for my trades. So, mark it at a good location. A good location would mean outside the prior day range or prior day's range, because a range last week, we had like 3 inside bars, I think, maybe 2. But yeah, we don't want to trade inside that because it's no man's land. World War One, no man's land on the Western Front, where whoever was there, you were a goner. Okay? No man's land is not a place to be. You can't trade there. Doesn't matter if you're a bull or a bear. If you're on no man's land, it's not good. Which, by the way, side note, really, really great World War One podcast is Dan Carlin Hardcore History Blueprint for Armageddon. It is like $3, but if you're friends with me, hit me up. It is really good. It's like an audiobook. So if you like history, that's my recommendation it's more like an audiobook than a podcast, but it's a great history show. So anyway, next thing, don't trade. This is a really important section. Don't trade in chop. Okay, chop comes after an expansion. Chop is just no good unless it's part of a higher time frame move. Like we come down to this last Friday, we gapped up, we came down to the prior day high key level. After a big expansion move, we consolidated for about 30 minutes, and then at the bottom of that range, there was little confirmation bars. In a range, we don't want to get long at the top, really, unless there's like really good confirmation bars. But generally, the best confirmation, at least the best expected value will come at the bottom of the range. But it'll be a little bar, okay? It contracts before it expands. Just 5 minutes. There's only 2 5-minute bars. So the opportunity is small, but it was there. And yeah, that's really it, guys. Like, you got to wait for the confirmation. And if it's chop, don't trade it unless you get those really little bars. And it's part of, since we were at prior day's high, we had gapped up, we were outside the range. I expected bulls to come in. And they did come in. They brought it up like another 175 NASDAQ points or something. I don't know. So don't trade with chop right after a move. I said in your direction, but I could just say right after a move. Actually, is what I might edit this to, because right after a move, sometimes we'll get a move and it'll just come down and come back right away. But that's erratic. That's not tradable. Okay, that's just guessing and gambling. We gotta wait for confirmation. And then if the price is overextended, but if we're very, very overextended, you could consider a mean reversion play. You just have to wait for confirmation. You have to wait for confirmation. Because after the price extends or overextends, we can expect a pullback or some consolidation. You got to wait for the moving averages to catch up. It's not a good time. It's not a good price to buy if it's overextended. You got to wait for some contraction. So I'm going to start to do this. This is a good psychological tip. I'm going to take 10-minute breaks. If I don't see it looking good, 10-minute break, come back, look at the market. If there's a really big move, I might take a 30-minute break. But you got to have other things to do as a trader. You're like a hobby, something to focus on, divert your attention. This is all for my video. I got to go play pickleball right now. So I got pickleball in 17 minutes. So wish me luck with that. But I really appreciate you guys watching. I'm going to probably release one more video today, maybe. But maybe not. Maybe not. I don't know. I really look forward to hearing everyone's feedback, especially on this part. The comments was like a fun thing to do, but this is what I was really excited to make the video about, and I really look forward to hearing what you think. So thank you for watching. I appreciate it. I hope everyone is doing well and trading well, and I'll see you at the next video. Peace.